Welcome, guys, to the daily analysis for January 5th. On Friday, we had a pretty ugly looking daily candle for both QQQ and SPY, where we gapped up in the pre market and then just sold off majority of the day before having some form of squeeze going into the close. However, everybody who was in the Substack chats already knows that I was calling out this selling to be kind of a trap. And the reason for that is semis were actually quite strong on Friday. Usually, sustainable selling that's going to continue for a while, is going to be led by the semis. Why? Because semiconductors are kind of the king of risk on, risk off market behavior. Semis are the backbone of tech. And when semis start to sell off, it's usually a sign that there's not as much interest in tech growth in the future. And that's usually going to lead to tech selling and then finally contribute to SPY, S&P 500 selling. But if semis are strong, that's usually a risk on market behavior. So when QQQ and SPY sold off on Friday, it wasn't going to be sustainable. It was part of the bottoming out process. We also closed above the 9-week moving average on both of them. And all in all, Friday's bad looking red candle wasn't actually that bad. So we had already discussed it on Friday as well as in the weekly watch list. And then it's no surprise today that we are gapping up. So we are gapping up to right around this area where we broke down on Wednesday and then again on Friday. So this is obviously going to be an immediate resistance and a resistance of importance. We have already been to the 50 MA on the hourly charts once, had strong rejection. If we come back here, expect some consolidation. I'm not saying we just break through it and go, right? It might happen. If we break through it and go, that's obviously very bullish. But given that we have a strong pre-market action, expect some consolidation around this resistance. But there's a higher likelihood that after that consolidation, we'll break out to the upside and start the bullish momentum that should follow a consolidation of this kind. On the monthly charts, I had already showed you guys yesterday in the weekly watch list how we had an inside candle on the monthly charts in December. And last time, similar consolidation and an inside candle on the monthly charts after the pandemic in around September, October 2020 led to another strong trend. That's kind of what we're expecting here. But not to jump too ahead of myself for now, for the daily analysis, expect some consolidation around this hourly 50 MA. So expect some rejection in the morning around in this resistance area. Once we get above the hourly 50 MA, the bullish momentum is back on. In the meantime, some consolidation in this range would be ideal. So the neutral area for today is, let's say, 619.5 to around 615. So that's your neutral area. Above 619.5, we are bullish first to 621.5 and then 624.5 to 625 area. Bearishness only begins below